Fundsupermart.com.
Hi Philip, what is the fund's investment objective and what is the strategy adopted by the team to achieve this?
Okay, so smaller companies are an exciting area. They're risky, but they have a lot of growth opportunities. So what we're looking for is growth in our companies and sustainable growth. So our first level of risk control for being in these smaller companies is by buying a better quality business model. So we aim to outperform the index over time, and we do that by buying these better quality companies, quality growth companies that are able to grow their business, to compound over time. So we're definitely not value investors. We won't buy companies which we think are poor business models, even at any price, but we will buy companies that have a higher growth, higher returns on capital over time. So we're bottom-up stock pickers, but we have an eye to the macro as well. So our focus and our returns come mainly from the bottom up, 70%, and some of it from getting the macro broadly correct. That's about 30%. So we're 70-30, bottom up, top down.
What are the reasons for investors to invest in a European small to mid-cap fund?
Well, I think the great thing about European smaller companies is that you can buy them cheaply today. So the whole market is on around 11 times, and smaller companies are on about the same multiple as the European market, but they're growing faster. So in the past 20 years, in almost every year, the small companies have grown faster than large caps. And they also have returned better returns on a risk-adjusted basis than large caps. So the potential for them to carry on from a low multiple today, I think, is quite attractive.
Based on the fund's 31st July fact sheet, it had a 10% negative active weight in two sectors, consumer discretionary and financials, against the benchmark. What are the reasons for this underweight for these two sectors?
Yeah, that's a good question, because when we're looking at growth, we're trying to find companies that can earn a better return, but we're also looking for companies that have a positive tailwind helping them in their markets. So in terms of consumer discretionary, we find in Europe, in the local markets, it's actually quite a difficult environment. Consumers are under pressure. They're busy paying back their debt. They're paying back their credit cards. So consumer discretionary spending is under pressure. So in terms of the macro, that's why we're underweight consumer discretionary. We're also underweight financials because we see financials are under pressure, but we have a long-term underweight in financials in our small cap funds because it's very difficult for a small cap financial to compete against a large bank. So a small cap that operates in maybe a small financial niche, we're prepared to buy that, but a small cap bank competing against the largest banks in Europe doesn't really have a natural advantage. So we have a long-term underweight in financials as a result.
The top three sectors overweight for the fund were healthcare, IT and materials. What are the reasons behind these overweight positions?
Yeah, so we're overweight healthcare because we can see that in Europe we have an aging population. So populations get older, there are more people who need to be looked after for longer in their old age. So in terms of healthcare services and products, that gives you a very positive tailwind to the company's environment. So we see them growing their sales. So that's where we look for healthcare companies. And then in terms of materials and IT, we can see that these are areas where small cap companies can compete very effectively against large caps. So IT and materials are generally growth areas compared to GDP, but we also find lots of great small caps operating in niches here.
The fund also held an overweight position in Germany. What are the reasons for this country allocation?
Germany has the strongest growth almost within Europe across the bigger economies. Germany has done its homework, it has a flexible economy, it has an amazing export base. And so even if European growth is relatively low, of the large companies, Germany has a much higher growth. And they benefit from global growth from their exporters. So when we look for individual companies, we find many more in Germany, particularly in the engineering, who have a higher return on capital, higher growth, and we can still buy them on good valuations.